When it comes to buying a house, most medical professionals, they think that they have to save up a 20% down payment, or they think that their student loans are gonna have a negative impact on them qualifying to get a home loan. That is simply not the case. There's actually a mortgage program specifically designed for medical professionals so that you can buy a house with little to no money down, no private mortgage insurance, and most people don't even know it exists. This program is designed for medical professionals like doctors, dentists, pharmacists, veterinarians, CRNAs, and even medical residents and fellows.
Doctor. Doctor.
Doctor.
Doctor. Doctor. Doctor.
Doctor.
So if you're in that world, this is for you. In this video, I'm gonna break down why this program is so powerful. First off, let's talk about down payment. With this program, you can put literally zero down. That's 100% financing.
Incredible.
Which is typically a feature that's only reserved for veterans and USDA loans. But with this program, you don't need to be a vet, you don't need to be buying out in the country, you just need to be a medical professional. Now, if you were getting a normal loan and not putting at least 20% down, you're gonna have to pay something called PMI, or private mortgage insurance. But with this program, you can do 100% financing and still have zero PMI. This is a huge win for your budget, keeping that payment more affordable without having to come up with the funds for a down payment. Another great feature of this loan is that you can finance up to $2 million. That means you have a lot of options when it comes to purchasing a house. And the fourth major benefit of this program, and this is a big one, is student loans. We all know med school, it's expensive, and it's totally normal for a medical professional to have accumulated some significant student loan debt. Now, typically when getting a home loan, your student loans are going to count against your debt to income ratio, which is going to reduce what you qualify for. Well, if you're in your residency or fellowship, we can completely exclude your student loan payments from your debt to income ratio.
Goodbye, student loan payments.
That's a huge game changer because student loans are typically what block medical professionals from getting a mortgage. Now, here's what most people get wrong. A lot of doctors, they think that they have to delay buying, that they've got to save up a big down payment, pay down their debt. But this program, it's specifically designed so that you don't have to do that. So instead of dumping your cash into a down payment, you can keep your liquidity. And instead of waiting, you can buy early in your career. And instead of letting student loans hold you back, we structure your financing to where they don't kill your deal. This is less about getting a loan and more about using the right strategy for your situation. Now, there are some rules to qualify. Number one, you do have to be in one of those eligible medical professions that I talked about earlier. Number two, the medical professional has to make up 50% of the qualifying income. So if you're buying with a spouse or a partner, your income needs to make up 50% of the qualifying income. Now, here's the good thing. Let's say that your spouse or partner does make more income. Well, we're just gonna cut their qualifying income down. So if they make more, it's not a deal breaker. It's just that for the purpose of qualifying, your income has to make up 50% of the qualifying income. And the third thing is this is for primary residences only. You can't buy investment properties, second homes, so you can't build your real estate empire with it, but you can buy the house that you're gonna live in. Now, here's something that's cool. If you've graduated, but you haven't started your residency or fellowship yet, we can use your offer letter to qualify you for the loan, even if you haven't started yet, as long as you start within 150 days of when we close. So if you got the degree, you could be good to go. Another great feature that most lenders overlook is that you're allowed to use gift funds with this program. So if you've got a family member that's willing to help you with your down payment or closing costs, even though, by the way, the down payment's not required, those funds are eligible for the transaction. So between future income, flexibility on the student loans, and a low cash requirement, you can see how powerful this is when structured the right way. Now, here's where people mess this up. They either go to a retail bank that just doesn't really understand this program, they get quoted something generic that doesn't maximize the benefits that you're eligible for, or they go to a lender that tries to force them into a conventional loan when this program would have been a much better fit. And the result is that they either overpay or they think that they don't qualify when they actually actually do. If you're in the medical field and you want to see what this actually looks like for your situation, I can run the numbers for you, show you multiple options, and not just for this program, although it'll probably make the most sense if you're a medical professional, and I'll show you how to structure everything the right way based on your income, your debt, and your timeline. Just reach out, hit the link below, we'll map it out, and if you like no BS mortgage education content like this, hit that like button and make sure to subscribe to the channel.